This is the Daily Market Comment by Marios Hadjikyriacos. I'm Maria Pachurdiz. Thanks for joining us at XM.com. There's been a change of fortune for Eurodollar this month. A cascade of cheerful U.S. data releases has convinced traders the Fed will push the rate hike button one final time this summer, while in contrast, the data pulse in the Eurozone has been weakening as the troubles in the manufacturing sector pushed Germany into a technical recession. Hence, the turnaround in Eurodollar has been built on the foundations of economic divergence. Looking ahead, the next round of data releases this week could provide more juice for this slide in Eurodollar to continue. Business surveys suggest the U.S. labor market enjoyed another stellar month, while inflationary pressures in the euro area seem to be cooling, according to the same sources, leaving scope for Fed rate bets to intensify further, but ECB bets to taper off. A resurgent dollar and relief that a U.S. debt ceiling deal has finally been reached have left their marks on gold, which hit its lowest levels in 6 weeks earlier today. It's a troublesome environment for bullion, as the steepening of the Fed's implied rate trajectory has simultaneously turbocharged the dollar and propelled Treasury yields higher. On the bright side, the slide in gold has not been massive, indicating that there's still some underlying demand. All told, the retreat in gold could persist for now, especially in the case that the non-farm payrolls print on Friday exceeds estimates, as it has done 12 times in the last 13 months. Wall Street raced higher on Friday, with tech stocks leading the charge. Futures point to further gains today when U.S. markets reopen after a long weekend, following news that lawmakers struck a deal on the debt ceiling. The agreement still needs to pass Congress, and that won't be easy. Some Republicans have already voiced opposition to the deal, arguing it doesn't moderate debt levels enough, which complicates matters, as the Republican majority in the House is razor thin. For equity markets, the darker dimension of the debt ceiling resolution is the liquidity drain that will ensue afterwards, as the Treasury scrambles to rebuild its cash levels over the summer. Finally, the Turkish lira hit a new record low today in the aftermath of President Erdogan's election victory. Investors are betting on another 5 years of unnaturally low interest rates and inflationary economic policies, which ultimately result in currency debasement. This was today's Daily Market Comment. Thanks for joining us at XM.com.